Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by taxbuddy.com, a leading tax filing portal in India. Yesterday, I could not bring post-market report as I was too busy with some other work in Mauritius. It's surprised to know that there are people who follow me in my YouTube even in Mauritius. So coming back to our markets, so yesterday markets reacted to TCS numbers, but most of the analysts were telling either TCS results was good or in line with estimate or slightly below expectation. But even the people who said it is slightly below expectation, they said that it has already factored in the prices, but it fell so much and brought huge negativity for our market. The day before, in the second half of the trading session, the US markets also fell drastically. So that also added to the negative sentiment. So the negative sentiment started with TCS, but at the end of the day, TCS has recovered. But other stocks like HDFC Bank, HDFC, Infosys all fell. That's because people assume that when the TCS results is not good, market is falling. So they think that the Infosys, HDFC, Bank, which are set to declare results this week, will also likely to fall. And of course, HDFC and HDFC Bank merger is there. So because of that, HDFC also fell. So basically, it is HDFC, HDFC Bank, uh, and other banking stocks responsible for the drag. And Bank Nifty has been hugely volatile for the last many trading session. And Bank Nifty has been making more than 500 point intraday move almost on a everyday basis. So making trading very, very difficult. And surprisingly, Adani Enterprise is the one that came under severe selling pressure. That's because, so they are planning to come out with a public issue, follow on public issue in the month of January. So that news, so when a company coming out with a follow on public issue, they will have to price it at a discount to the current market price. So that is the reason why there was a huge profit booking. So that led the market, we can say almost crash. So finally, it was not the day of a TCS. In fact, TCS did not even appear in the bottom 15 stocks of the Nifty 50. It's other stocks. But however, metals were looking good. So, as I've been telling you, uh, once again, uh, India is the worst performing stock market in the entire year 2023. Of course, though we can say entire year 2023, it's normally 10, 11 days only. Out of that, only 6, 7 trading sessions only. But all other markets in the world are very much in green. US markets yesterday followed the tradition of one day up, one day down. Dow, uh, since the beginning of this year, so it is following the pattern one day up, one day down. And following that tradition, a day before yesterday it was down, yesterday it was up. Of course, Nasdaq is closed in green for the third consecutive day, but still it did not close uh, above previous day's high. So previous day in the second part, the Nasdaq fell about 200 points. Now about 100 point has been recovered. Coming back to our market, one good thing we can say that the markets are going into the result season so without much expectation. The first set of results will be coming from IT stocks. And IT anyway underperformed down 25, more than 25% last year. So we went without expectation. Even after that, TCS has fallen 2-3% intraday. I did a strategy which I told you. I bought some call option and then sold three times the call option OTM. So I made some small profit of about 30,000 rupees for 10 lots. So that means for each lot I made about 3,000 rupees profit. Had I held on to it, I would have got better profit, but in the morning markets were too bearish. I exited. Today, once again, Nasdaq is continuously higher for third straight day, and today Infosys results will be coming. So the markets will be focusing on uh, IT stocks once again today. Overall market setup is still very, very weak. So we were not able to close above 18,000. So as I told you, 17,800 is the support. So if that is broken, so it's going to be very, very bad. But given the fact that the global cues are really so good, so the probability of that happening is very, very low. And but anyway, we cannot say because the way FIIs are selling in the year 2023, there was not in a single day they were net buyers in cash market. So every day they are selling. So I really do not know. So if this continues, it's going to be bad for the entire year. That's because, you know, usually in the month of January, FIIs will set aside new allocation for the year. So the way they are continuously selling, so it shows that their allocation to our market is not really very good. So if that is the case, we may not go down, but we may not perform very well. If you look at 2022, we have not done badly. We have got 4-5% return in Nifty, but 4-5% is much less than the fixed deposit return. So, like the FA may continue to sell our market, may not go down, but, it may give 4-5% return. But with this elevated interest rates, the banks are offering about 7.5% interest rate, some lower rank banks. So at least, the Nifty will have to move more than 10% to justify the risk that we are taking. So that is, assuming that market closed around 18,000 in December end. So at least it should go to 20,000 to justify. So that is itself is becoming a question mark now. So anyway, that we will discuss in another one. So there is no need to say Adani stocks will be in focus because of their fallen public issue news. And other than that, the stocks, that are likely to declare results today and tomorrow, like Infosys, HCL Technology, and even HDFC Bank will be in focus today. So Nifty is likely to take support around 17,800. So I'm talking about the spot and resistance. There's no need to talk about resistance, but even if there is a short covering, Nifty is likely to face resistance around 18,100. So which is, I'm talking about the spot, not the future. Hope you enjoyed listening to this audio. Thank you for listening.